Hello, ladies and gentlemen, and welcome back to another exciting episode of the Breaking Bitcoin Market Update. It is Monday, May 29th, 2023, foul year of our Lord. Happy Memorial Day to everybody celebrating in the United States and to those around the world who may not be celebrating Memorial Day today. Happy Money Monday. You guys know what time it is. You guys know what time it is. It is Money Monday. Every Monday we make an investment into something that we plan to hold for the long term, or at least definitely a positional trade. Today we're going to be breaking down why we're going to be making our Money Monday allocation to XRP based on the conversation that we had on Friday's stream, and kind of what we hope for the future for the XRP asset and what we expect kind of coming out from the SEC versus Ripple Labs lawsuit. Anyways, it is a fantastic Monday, guys. We have some exciting price action to discuss. What we experienced yesterday on Sunday was a nice, if somewhat rare event where we have some decisive price action coming out on a weekend. Now, typically, we want to be very careful about the price action that we see over the weekend, especially in cryptocurrency. This is a common problem that newer traders to the cryptocurrency markets will fall into. They will want to trade on the weekends because they can, and they're seeing all this very exciting, high volatility, low momentum price action, and they tend to follow along with the herd, which is one of my top recommendations, but we often don't see that follow through carry through into the week of trading. We often see a fade or a reversal of that. Time will tell if that is what we're going to be seeing this week, because we did see some exciting breakout price action on Sunday, some strong green candles on both Bitcoin and Ethereum. The S&P 500 today is pushing to the upside. However, we are seeing currently for today red candles from both Ethereum and Bitcoin and the majors, as we are seeing just a kind of a continued movement of what we've seen in the preceding weeks. We do have a lot of exciting stuff to talk about. We're going to break down the technicals on Bitcoin and Ethereum, and we're also going to be doing chart requests. We're going to be looking at the Forex markets. So if you guys have requests, make sure to get them in, and we will discuss them. Before we begin, as always, if you enjoy what we do, you can easily support the stream. If you're watching on YouTube, giving us a subscription, if you haven't already, ensures that you never miss a timely market update, increase the alpha that you have in the market. And if you smash the like button like it owes you money, I have heard the Bitcoin Fairy will place one Satoshi underneath your pillow tonight. So you don't want to piss the Bitcoin Fairy off. Definitely check that out. Also, make sure you go grab our free guide, Supercharge Your Trading Today, the 5 mistakes holding you back from profitable trading. It is the second link in the description and the contents of the banner over there. Now, I did slap that banner together rather quickly this morning because I did put this new scene together, so I will be making that a little bit more reasonable, but it's 5mistakes.crackingcryptocurrency.com. Shout outs to everybody that I see in the chat. We've got Mr. Ether, Robert Warner, Errol Hyatt, and Robbie White. Hopefully you guys are doing fantastic on this lovely day. The sun is shining. And I want to implore everybody, this seems to be the current alpha narrative leading the cryptocurrency markets, which is, pause a second, let me take a sip of my coffee. The current narrative that I'm seeing come in from just about everybody. And let me know what your guys' personal thoughts are. And this is important. This is kind of the pre-planning phase of any strategy. For example, you can have a very successful strategy, but you start executing it and it does well for you for several months, maybe even 6 months, maybe even longer. But then all of a sudden you start to notice that your strategy stops performing the way that you intended it to, that it stops making you more consistent profits, and it starts, or maybe it starts introducing losses into your system that you hadn't accounted for. And now your gains are not compensating for your losses. So your strategy is not performing. It is not making you happy. It is not making you money. There are often other factors that influence your strategy that go into the pre-planning phase. For example, we don't trade when volatility is like this. We don't trade news events. We don't trade this particular month. You know, Bitcoin is very flexible, very forgiving from the perspective of someone developing a strategy in the cryptocurrency markets, a technical strategy, because it's very cyclical. There are very well-respected cycles and patterns and very clear leading indicators in the cryptocurrency markets that we don't typically get in other traditional markets, such as Forex or even stocks and equities. So that's a common mistake. But again, just having an idea of when you plan to increase or be very active with your trading and investment activities, and when you plan to relax, and when you plan to hold, and when you plan to be out of the markets, having those ideas ahead of time before the rubber actually meets the road will save you from a lot of heartache and stress. So the narrative that I'm seeing from many of the crypto savvy is that this upcoming summer that we're about to experience on this fine planet of ours, is going to be a relatively uneventful one in the cryptocurrency markets. There will be, of course, pumps, there will be dumps, there is always that. But in general, we will have a relatively flat and uneventful summer. Okay, that seems to be the current narrative coming in. However, the next 2 years following this summer is the time to lock yourself in the room and really just look to retire from the cryptocurrency markets. I believe in that second part of the narrative. I'm not sure what price action we're going to experience over the summer. Trying to predict such a thing is foolish. I will just trade what the chart presents me, and I will do what my strategy suggests. I will do what is required. And that is a mantra that you should probably go ahead and burn into your brain if you really want to make it in the crypto markets this cycle. You have to do what is required. You have to be willing to do what others aren't willing to do, whether that's working longer hours, whether that's reading more white papers, whether that's putting more time in backtesting, whether that's just more time in front of the computer. You're going to have to cancel plans with friends. You're going to have to not go out to the club. You're going to have to stay up late reading the latest strategy creation process. You need to do all the things that other individuals are not willing to do if you want to have success, vast success, this cycle, this time in the cryptocurrency markets. If you do what everybody else does, right? If you do what everybody else does, clock out early, go to the beach and all that stuff, you know, you're not going to make it, because the people that are going to eat your lunch are the ones not going to do those things. But enjoy the summer. This summer, if it is going to be a relatively uneventful one, and then prepare to lock yourself in that dungeon for the next 2 years. And let's get this money, ladies and gentlemen. All right. With that out of the way, if you guys have any questions, comments, or concerns, sarcastic remarks, drop them in the live chat. I will do my best to respond to them timely. And let's move forward with the analysis and start today's Breaking Bitcoin Market Update. This scene is the one we want. All right, we will start off as we are wont to do. Before we get down into the daily and we get into the nitty gritty of the daily, of course, let us zoom out and view things from the lens of weekly price action. Okay, this is very helpful. This should always be the first thing that you do at the beginning of the trading week and at the end of the trading week, because down here on the daily, down here on the 4 hour, down here on the 1 hour, and God forbid, down here on the 5 minute, it's easy to get caught up in the idea of trading the current setup, right? And that's fine. You should be focused on that as a trader. But you want to understand where price is in relationship to its overall macro cycle. And you want to understand where price is relative to where investors are viewing the markets. Okay. It's one thing to view how traders are viewing the markets, but they don't really move the markets. Traders don't really move the markets significantly in the long run. They're just along for the ride. It is the investors, the whales, the big pockets. Those are the ones who make the movements that significantly alter the course of price trends for a long periods of time. So we want to be analyzing the markets first and foremost with what are they likely what are they likely doing? What are the whales doing? What does the chart look like? Not on the daily, not on the 4 hour, not for short-term price volatility, but what does it look like from somebody who invested $10 million 6 months ago? What are they thinking right now? And the weekly chart can help you identify that. All right. Probably the easiest narrative that we've seen here on the weekly chart is very simple. I do believe I have it over here. This is just my simple RSI, missile RSI. The missile RSI is just an RSI algorithm that I've modified for my use case. We will, of course, look at the weekly chart of BTC USD. And I think from a technical perspective, there is this very simple narrative where obviously we were in the decline of the bear market. We see RSI trending down, making lower lows and lower highs right along with price. Price is making lower lows and lower highs, lower lows, lower highs, lower lows, until we reach this capitulation event. All right, this capitulation event is important. This capitulation event again, it's very important to notice this, right? There was this idea that price never goes lower than the previous cycle's high. Right. So once we put in a bull market high and then a bull market low, and then we push forward with the next leg of the bull market to a new all-time high, there was this idea as we were descending during 2022 that historically Bitcoin has never traded below previous bull market cycle highs after we make a new bull market cycle high. Well, obviously that idea was shattered here in 2022, in November of 2022, when we did briefly break down below that $19,000 price level, and we actually went as low as $15,000. But we recovered very quickly to trade back above that level. So again, for multiple reasons, we've laid out countless on-chain evidence. We've looked at countless cycle charts. We've gone over this many, many, many times. It is my ardent belief that we have put in a bear market cycle low in the $15,000, 15.6, 15.5, depending on what exchange you're looking at. Low here, this is significant. All the on-chain evidence suggests that this is true. All the sentiment narratives that I am following suggest that this is true. And the technicals also belie this as well. Okay, so significant bear market low is put in. What does that mean? Well, from the investor standpoint, it means that pretty much anything after this moment is an okay time to accumulate. You don't need to worry. Of course you can, but I don't need to worry about whether or not price is going to take out this low, whether my investments that I make in this area are going to pay out or whether they are going to be losers. It is a firm, ardent belief that they will turn profits if given enough time. And this is why cryptocurrency bull markets are so forgiving and so exciting and enticing to trade. You can essentially buy anything you want. And as long as you just wait, you're rewarded. Now, from the technical perspective, obviously, Bitcoin transposed from an oversold perspective here as we were descending into the depths of the bear market. We went oversold here when we reached the support level around 19, 20,000. And this is where everybody thought the bottom was. We thought we had seen that high momentum sell-off, very similar to what we had seen earlier back in, right here, for example, at the end of the 2018, the beginning of the 2019 run or accumulation period. So everybody thought very firmly that we had seen that, but then we had the collapse of FTX and the final capitulation event that put us down at our actual lows. Notice that at that same time, RSI did give us regular bullish divergence, and regular bullish divergence, particularly on the higher time frames in cryptocurrency, is a very powerful signal. It is one of the primary exit signals that I use for my daily and 4-hour time frame strategy, as well as my 1-hour time frame strategy. So we went from an oversold condition with a regular bullish divergence. And then as we can see here on this last little rally up, we didn't quite poke our heads above the RSI into overbought territory, but we got pretty darn close. And we've seen the market retreat from that moment in time. So from a technical perspective, very easy to understand. The RSI still is in what is considered bullish territory. If you are a trend following trader, we consider anything above 50 to be bullish. We are seeing momentum continue to the upside, or we're seeing more continuation and follow up to the upside. So we've had a brief retreat in price. Price has pulled back. We've rallied a little bit. And overall, this is kind of unconvincing and fairly undramatic price action, right? The big picture moves here are, of course, looking for sustained breakouts above 30K, looking at 35, 37K. And since we are flirting with breaking down with the range, of course, we do turn our attention to the daily time frame where we have that head and shoulders pattern, which is giving us a measured move target down to 23.4K. Now, again, it is possible, just analyzing the cycle, we need to be prepared for this. Every single time we put in a bear market low and then rally off that bottom, okay, we have a powerful rally, but then eventually we begin the secondary sell-off phase. So that is going to begin at some point in time. Notice that back in 2019, when we rallied off the bear market lows, we did actually reach overbought on the RSI on the weekly time frame multiple times. We actually have a little bit of regular bearish divergence here, which is interesting as well. So again, that same signal. And so far, this rally has not been as conclusive. So just measuring from the low to the high, we had a 100% rally. And over here, if we measure from the low to the high, we had a 341% rally. So fairly, again, if this is the end of the first rally off the bottom, it would be uncharacteristically a little bit uneventful or disappointing for only a 2x on Bitcoin instead of a 3x. However, these things happen. So again, we want to be prepared for that. We want to be aware of that. Now, again, that doesn't really affect anything from the long-term investment perspective, because we do believe that this is a long-term low. So it doesn't matter if you are a donut and buy here and price goes down to form a low. Based on everything that we've seen before, you have a conviction that your investment will be protected, because historically we have never gone back below bear market lows. Now, again, for the investor sitting on the sidelines, this can look a little scary to be buying up here. It can also be a little scary to think about price just breaking out and moving on without you. It depends on what level of fear you want to tolerate. Do you want to tolerate bird in the hand is worth two in the bush, or do you want to try to time your investment a little bit better and perhaps get a better averaged entry price. So we are, of course, being aware and waiting for this eventual price retreat, and we are just following localized price action to determine when that will happen. So that's the perspective on the weekly time frame. We did have, at this point in time, a significant amount of short-term holders in profit. And of course, turning our attention to on-chain evidence here, let's start off with, excuse me, let's just refresh here. And we will see how things have updated. I do want my dashboard, and we are going to begin with the bear market mirage dashboard. All right. This is very interesting. We seem to have had I hadn't noticed this before, but let's take a close look at this. This is something that we track fairly closely. This is Bitcoin % miner revenue from fees. Of course, we did have ordinals, and we had increased. Yeah, okay. So this is fine. This was ordinals. Okay, this is okay. As you can see here, we have a massive spike in % miner revenue from fees. So we had a massive increase in demand for block space right around the beginning of the second leg down here. But I think that was associated with the launch of ordinals. So I'm not going to get too concerned about that at this point in time. Now, something that we do want to be mildly concerned about, and this is basically the main reason, this and several other charts that I'll show you, for the fact that I do have a bit more of a bearish bias right now. And that is the fact that this is new address momentum. And this is tracking the relative growth of short-term users of the Bitcoin blockchain versus sustained yearly growth, right? So we're tracking the 30-day moving average of the growth of new addresses and the yearly average, okay? Now, when we have the 30-day moving average trending above the yearly moving average, that is an indication that current growth is outpacing the yearly average growth. And therefore, we are seeing fresh use, more use of the Bitcoin blockchain, which is associated with fresh infusions of new capital, which are associated with bull markets and growth of price. It's growth of the ecosystem, growth of everything going up, everybody's happy, more people are using it. And this is the basic metrics that you would have from any tech company or any product you could possibly sell. Are there more people using it? Great, then we're growing. Okay, usually valuations go up. Now, we had broken out back here, even prior to, in November, prior to the capitulation, we had started breaking out. More people were using the Bitcoin blockchain, even as prices were at their lowest that we had seen for the year. And we were growing very nicely. 30-day moving average was moving up very nicely, right in line with price, until it acted as a leading indicator, which is what I love about on-chain technicals. It acted as a leading indicator, and we can see here that new address momentum started absolutely plunging back down below the blue, which is the yearly average. So we are now back in bearish or negative territory of network growth. And that acted as a leading indicator because that decline began happening prior to prices moving down. All right. Now, I would like to see a growth of this, and we have seen a bit of a growth, but we're seeing that 30-day moving average continue to trend down. And that is concerning. We do want to see new address momentum growing in line with price. Okay. And we can just do all the analysis that you want. Moments where the 30-day tracks above, or periods where the 30-day tracks above the 365-day are associated with continued bullish growth and higher prices. And so I do want to see this turn back around. It might take some time though, because of course it is a 30-day moving average. So that is concern number one. The other concern, of course, that we have is we can see the decline in exchange activity right here. We typically want to see increases in exchange activity. Let's see here. Yeah, our one thing is nice is this, metrics like this. This is coin years destroyed. And this is very helpful to look at. And this also informs us that short-term holders are responsible for really all price action right now. It is not long-term holders. It is not investors. It is not Bitcoin whales who are taking action at this point in time. So when a coin sits in a wallet for an extended period of time, it accumulates coin days. So for every single day that a Bitcoin sits in a wallet unspent or unsent, they're sent on the network. These are synonymous. It accumulates a coin day. And so the more coin days that are being accumulated, it lets us know that Bitcoins are not moving around on chain as frequently. And so we want to be able to identify, or we are able to identify, that when we have periods of significant uptick of Bitcoin activity from long-term holders, when we start seeing old Bitcoin start moving around the network, typically that is a warning sign that if the older long-term holders are looking to rotate and cash out of the market or spend their coins, then we as retail traders should also be attempting to follow along with that. As we can see, if you accumulate enough coin days, you accumulate a coin year. Just like if you live enough days, you live enough years. So when we see this metric, coin years destroyed, picking up, we can see that Bitcoins that have been sitting around for years are beginning to move on chain. And we are not seeing that. We are seeing the metric is in orange here, whereas the price is overlaid as a logarithmic chart in white. And we are seeing coin years not being destroyed. We are seeing this metric track down. So long-term holders have been very content to accumulate and sit tight throughout this entire bear cycle. And their behavior has not changed. We are not seeing a change in the hodling behavior of long-term holders. So this should inspire confidence in the network. We are not seeing, even with this big rise, this 2x in price, we are not seeing any uptick in long-term holder activity. They're very content to sit and wait, and for multiple reasons that we would agree with them. Let's see here. Yeah, liveliness also ticking down, which is good. Let's see here. Okay, now let's turn our attention to our bull market majesty dashboard. So we've already identified that new address momentum is on the decline. However, we're not seeing any massive activity coming in from Bitcoin whales. So they are not taking advantage of this to unload their Bitcoin. Short-term holders are. Short-term holders are. All right, and we can actually see that, I believe, very nicely from this workbench right here. Let's see here. Okay. Well, this is interesting over the last week. Yeah, you can see this absolute plunge. So what this metric, what this chart is young supply net position change. All right. And what we are doing is we're seeing a 30-day moving average essentially of change in old coin supply. All right. So if coins are maturing into being held in a wallet for 6 months, then this metric will move up. And if coins that have been held for longer than 6 months are being spent, this metric will move down. While we are not seeing a massive amount of supply move from the longest term holders, or even the sharks, we are seeing quite a bit of kind of the lower cohort here, that coins are being spent that have been held longer than 6 months faster than coins are maturing. All right. So we do see in the short term holders here, again, there's more evidence here that there was a rush to take profit, as 90 to 95% of them were in profit. Let's see here. Yeah, so the two big catalysts, of course, that we're watching for that could always strike at any time is the Mt. Gox trustee balance and, of course, the United States government balance of Bitcoin. All right. I have alerts set for both of these, so I will be one of the first to know, except for, the trustees who know when it's going to happen. But we have not seen any declines from the Mt. Gox trustee balance since when was the last since 2018. So this balance has not shifted. I know there's been a big hullabaloo about whether or not the Mt. Gox coins are about to hit the exchanges. So far, no change in that, nor do we see a significant decrease in the U.S. government's balance of all the Bitcoins they've seized from things like Silk Road, for example. Of course, that is a lot of sell-side pressure. The U.S. government currently holds 205,514 Bitcoin. And the last time they made a distribution was in March. That was all over the news about the auction. So again, nothing too surprising there. Let's see here. A little bit more happiness here. Again, this is the Bitcoin investor tool. We're simply looking at the 2-year moving average and then the 2-year moving average times 5. And very similar to the Mayer multiple, we can see that every time Bitcoin's price is below the 2-year moving average, it has been a generational buying opportunity. And every time it's been above the 2-year moving average times 5, which is the pink line, it has been a good opportunity to exit your position. So we are still in that long-term value area of accumulation, which is very helpful. There's new addresses momentum. We already went over this. And again, very similarly, here is the other concerning metric, which is exchange volume momentum. We want to see exchange volume picking up and increasing as a bear market, or excuse me, as a bull market grows and progresses. And we're not seeing that. We did track briefly. The 30-day did track briefly above the yearly, but it has since plunged back down again, acting as a leading indicator. And exchange activity has begun to settle down and die down. Reserve risk. This is again another long-term investor standpoint here, where we can see that based on on-chain reserve risk in the price divided by HODL bank, we can see that Bitcoin is still in an extremely high value area to accumulate and not in an area to distribute. And this is why, again, the more intelligent investors are looking at metrics like this. We do not have a massive rush to the door, even though price has done a 2x from long-term holders. So there's no sustained risk of this being the top of the market. I think this is either a brief pause or the local top before, as we've discussed, our cycle sell-off to form a higher low before the real bull market begins. Okay, that's all we're going to look at today as far as on-chain evidence. There's a little bit more that I want to dig into there in my own private time so I can have some stuff to present to you in a more analytical fashion. But again, in summary, what we've seen is that we have a lot of excitement from the short-term holder cohort who are looking to take profits, as 90 to 95% of them were in profits based on price doing a 2x from the FTX collapse. They are taking profits, so we're in that distribution area for short-term holders. However, long-term holders are content to just sit tight. Overall, we are bullish long-term on price. The only reasons that we're bearish is obviously the fact that we reached a bit overbought on the RSI. We had a lot of individuals taking profit, which can lead to kind of a cascade effect. We do need, of course, a cycle higher low to complete the fractal. And the fact that we've seen on-chain metrics like new address momentum and exchange volume momentum actually begin to tick back down into their bearish patterns, their bearish trends. So those things are concerning. So for those reasons, I am more of the idea of seeing the resolution to 23.4K than the breakout here of 30 to 35, 37. However, as a trader, I need to be prepared for both situations. Yes, Alex, I see you, brother. I will get right to those, man. I promise. Okay, so let's walk down here and do our overall analysis here. Again, just from the weekly perspective, we have prices still below the weekly baseline, right? Weekly baseline is still overall bearish here on the weekly time frame. Now, again, you can see here that historically, this has just been a great metric to see sustained and continued breakouts. But you want to be using something a little bit more generous than this, I think, for your actual trading. This is a 200 weekly moving average. And so I think that it's going to obviously get you into the most powerful movements, as we can see here. This is your very clear, like, hey, it is time. Like the time is now. But we're still not quite there yet. All right, we need that rally and we need to break above 40K so we can begin that march to like 80 to 100,000 here on the weekly perspective, right? Again, price going from a little regular bullish divergence here to being almost overbought and crossing under. So inconclusive price action currently right now, Parallax flipping back down into the negative and not seeing really any momentum from Wadatar explosion right here. No reason to take any weekly trades, and therefore with the weekly we just stick to our overall investment thesis that this is a long-term bottom, and therefore we will be suggesting any accumulations basically anywhere, right? Here. Yeah. Like Aladdin from or the genie from Aladdin, right? Like exits are here. Anywhere. You can buy anywhere. Okay. Let's see here. Okay, stepping down to the daily on BTC. Of course, Bitcoin is above the daily baseline. So from a trade perspective on the daily time frame, we do have a bullish bias. We are looking for long positions. Do we have a setup right now? We do not. We do not have a trade setup. We've seen this happen on Ethereum is very clear, but we have a nice volume print here. Why? Where's my volume USD? Man, that moment, sorry, that feeling when you take a sip of your coffee and it's like closed. All right, sorry about that, guys. Yeah, daily time frame. Again, this is kind of a common, like, fake out or screw you pattern. We'll see it much more clearly when we look to the Ethereum chart. But again, where we have Sunday price action come in or Saturday price action, usually, again, so when we see a big pump on Saturday, usually we sell down by Sunday and then Monday continues that momentum. Whereas if we see a big pump on a Sunday, we usually retreat a lot of that momentum on Monday, and that is not the move, which is very interesting, I think. But again, certainly a pattern. So we kind of are of two points here, right? On the daily time frame, there's no reason to be taking a long trade right now. We don't have any primary signals. We just have some confirmation right now, but we still need to get our primary signal before we begin really moving to the upside here on Bitcoin. So our primary trade that we're looking for on the daily time frame is, of course, the reversal baseline bounce. Looking for price to retreat down here to about 24.4, where we'd be looking for a reversal within the trend. We'd be looking for a low price within the trend to move to the upside. Memorial Day. I don't think so. Okay, so that's really all we have on the daily time frame. Actually, interestingly enough, bottom feeder bought up this entire movement, which now would be successful. We did hit the TP on that particular trade, and we are getting, sometimes bottom feeder will identify these continuation follow through moments right here, like on this particular candle right here, which is very interesting. And so that's cool to see. Let's see if bottom feeder is going to give us some resolution from this particular trade moving forward. If individuals were looking for long trades on today's current candle, we are looking at a overall target of about 31.36 with invalidation at 26.433. So essentially, basically the support that we've established here, we want to see prices continuing to move up and not retreating back down here where we would expect a breakdown. Now, just to keep the chart pattern bros happy, why? Oh, because we're on Bitstamp. I was going to say, like, why do my lines keep disappearing? To keep the chart pattern bros happy, of course, we do have the current narrative right now is certainly the head and shoulders pattern, which you might argue is invalidated here. Of course, we have our left shoulder, head, and right shoulder with a measured movement down to 23.4K. Now, again, that might sting our reversal baseline bounce trade a little bit, but that's exactly what we saw the last time price sold back down to the daily baseline. We traded down below it briefly, put in a hammer candle, and then shot up to the races. So that's kind of the setup that I'm looking for. That's the one that makes the most sense. And we'll just see. We'll see how price evolves over the next few days. So no trade setup on the daily time frame. On the 4 hour, I have taken a long position now. As of this 4 hour candle, we have a 4 hour reversal baseline bounce. Again, just a nice, rally above the baseline. Everything we really need here. Even a 4 hour, I wasn't at the charts to catch this. I was at a Colorado Rockies game, so I wasn't able to catch this trade. But price did break to the upside here. Entry on this candle would have netted us a TP1 and a TP2. So this was a successful trade. Price is now pulled back. If you followed along with this trade, then you should have moved your stop loss up as you were hitting your take profits, and you were out of that trade now at TP1 or TP2. Well, your stop loss at either TP1 or break even here on this latest wick. And we now have a reversal baseline bounce setup, right? Where price has broken through resistance, a BPC, break, pullback, and looking for continuation. That is the thesis of that trade. So very simple, 4 hour long. That's the only active intraday position that I currently have open. On the hourly time frame, again, even better. We did get some initial signals over here, which would have been a losing trade. But here we have beautiful follow through with our initial signal on this candle. And, again, just able to follow this through all the way. Whether you took profits here and then you got back in on the continuation here, again, multiple signals on either candle, probably getting in here and being aggressive. So two beautiful 1 hour, one primary signal and one continuation signal. And just waiting. We don't have yet a reversal baseline bounce set up for the hourly chart right now. It just did not pull back far enough, but that's okay because that opened and paved the ways for us to have that 4 hour reversal baseline bounce. So we are getting some nice follow through on this right now and just looking for that trade to be complete. Looking at Ethereum. Ethereum is very indicative of kind of this. We've seen this multiple times, right? Where we get this pump and this push up. This happened on a Friday, of course. This was a Sunday where we kind of have this big green candle above resistance and then we just sell down immediately. So overall, if we see prices today or tomorrow sell back down, well, it's more conclusive if it's the day. Sell back down to the open of yesterday's candle. That's very bearish in my opinion. I think we're definitely heading lower. If we continue to push up from here, I think that's incredibly bullish, and we continue to push higher. But overall, again, the on-chain data has me expecting and anticipating lower prices. So, however, you trade the chart in front of you. All right, you trade the chart in front of you. This is why I don't trade my thesis. I provide my analysis, and then I take the trades my strategy suggests. All right. Yeah, so sorry. Ethereum, nothing on the daily right here. Just looking for that reversal baseline bounce, pull back to 1680.67. We do have Minx breaking above the zero line right here. So we do have things that are kind of suggesting that we could be taking a long trade today. You know, in fact, looking at this, I'm not sure why I'm not long on the daily. This, well, we'll wait and see. So I've got 6 hours. I've got 5 hours before I need to make a decision. 5 hours and 20 minutes before I need to make a decision. Obviously, if price moves back all the way down here, I think that will reset the signal and it won't be a long signal. But if we're still chilling up here, we will be looking for that actually daily long trade on Ethereum. I can't believe I didn't notice that earlier when I was doing my morning analysis. So there we go. We do actually have a primary long signal. This would be a continuation signal at this point in time on Ethereum, breaking above the zero line on momentum with a rising explosion level with positive alpha and parallax, so also suggesting trading to the upside. So very interesting. Now, we don't take that trade now. This is the candle that the signal is generating on, and we trade an hour prior to the daily close. So again, we've got 5 hours, 17 minutes to make that decision within that hour block. 4 hour time frame on Ethereum, did not take a position. Again, it wasn't as clean as of a reversal baseline bounce as I wanted. I didn't want to take double risk, so I simply took the risk with Bitcoin, although we do have a very similar setup here. Whereas Bitcoin, though, allowed you on the 4 hour basis to actually have a successful trade here on this breakout, whereas Ethereum did not. Unless, yeah, I suppose you could have gone long here. Yeah, gone long here and then taken advantage of this. So again, 4 hour time frame actually giving us a winning trade here on Ethereum. If you're monitoring your charts, break above the baseline, above zero, rising explosion level, positive alpha and parallax agreeing. Everything's fine there. Coming down to the hourly time frame, again, PTP giving you multiple opportunities to get into this trade. Here is, where am I looking for here? Sorry. Yeah, here we go. Here, long signal here, a little bit of drawdown and then able to catch this. And then similarly over here, we have the break above the baseline. Yep, so able to get long here and taking advantage of this movement as well. So 2 successful trades on the hourly time frame and 1 on the 4 hour time frame from Ethereum from the PTP system that I'm utilizing. And yeah, now we're just waiting for a reversal baseline bounce or a primary signal here. So nothing, and we're not getting that. So in summary, we have a 4 hour long signal on Bitcoin and we have a potential daily long signal on Ethereum. So we will monitor and watch that very closely. Okay. Let's take a moment and check out the chat, guys. Hopefully you guys are doing fantastic today. Let me know your Memorial Day plans. Are you guys getting out with the fam today? Are you guys doing some grilling, doing some surfing, whatever it is that you crazy cats do? Let me know. Let's see here. Shout outs to Mr. Ether, Robert Warner, of course, Robbie White, Errol. We've got Alexander Pearson, the man, the myth, the legend. Good to see you, my brother. We've got Mass Stash Scotty in the chat. What's going on, brother? We've got Rora Nora. Good to see you guys. Let's go over this a little bit. Okay, so Mr. Ether is only buying from here until 2025. Still looking for a back the truck up moment. Rora Nora believes that we are going to put in another leg to 40,000. Hopefully I pronounce this right. Is Leica from DLive. Thanks for watching over there on the platform, by the way, my friend. It says he or she says it seems that mostly Ethereum and Bitcoin is quite strong, but the rest of the market is underperforming. I would absolutely agree. So let's go to Crypto Bubbles, and we can actually see that on a weekly basis, things have been really giving back, right? And it's even worse on the monthly basis. We can actually see that month over month, most cryptocurrencies are in decline. All right, most cryptocurrencies are in decline. Pepe, of course, was up like what 1,000,000% at some point in time. Now only up 357%. And on the weekly basis, it's not that bad. These might look like they're gains, but you have to contrast them against what they've given back over the entire month. So this has been a very declining period for overall cryptocurrency markets. We're actually not seeing overall sustained movements. Says if you bought XRP, like I said, you're up. Yes, we do need to discuss Money Monday. So let's get, but first, let's look at Alex's charts. Okay, so we are now. He says he compared to this. So we're going to be looking at two charts here. Excuse me. Okay, yes. So we are looking at the distribution schematic, looking at the way that distribution goes based on Wyckoff trading or Wyckoff philosophy. So he is providing us the idea that this is, let's see, UTAD. Yeah, so, okay. So Alex is suggesting that this is a bearish distribution pattern. However, prior to this, that we are going to sweep these highs above 30,000. Okay? That we are going to be sweeping these highs above 30,000. This is our first sign of weakness. Okay? This recent plunge down that we had. And we are headed for prices slightly above 30,000 to come into this UT area. Between 31,000 and 32,000. And as we can see from this schematic, what happens after the UT is a decline back. Sometimes a sweep, a push above, right? The up thrust. If we get a UTAD too, then I think that would be 36K. Well, so if all that plays out as you are suggesting, then that would be right in line with basically what we've seen from previous cycles, right? You know, if we were able to get up to like 36, it'd still only be 134%, but that's all right. Sometimes we don't rally 300%. Sometimes that just is what it is. So again, that up thrust and then that sell off to form that cycle high or low before the real bull market begins. Okay. I like all this. I like this quite a bit. All right. So Alex is suggesting over the next 2 to 3 months, we see a decline, pullback, movement up, and then sell off to, I'm going to say 17K. I'm going to say 17. And altcoins will have plenty of time to perform and Bitcoin trade sideways. Agreed, man. I like this. This is good. All right, Money Monday, guys. What is our Money Monday allocation? Well, I decided that we are going to allocate to XRP. I am going to be allocating to XRP. And we discussed this ad nauseum on Friday about why that is the case. We looked at some tweets from the very critical of the SEC lawyer and looking over Ripple's case, where it was even in the footnotes that the SEC had said that the XRP token was did not pass that, or excuse me, I don't know if it didn't pass or does pass the Howey test. But essentially was not a security or would not be considered by a security, that they would essentially get wrecked if it went to jury trial. So we are anticipating, and this is also what Brad Garlinghouse is coming out and saying, that he expects a settlement very, very quickly, or for the case to be over. So either we are going to see XRP, or excuse me, Ripple Labs, go to court or settle with the SEC. Either would be very positive. And XRP is one asset, unlike others, that we have just not seen follow the primary narrative. All right. So zooming out, we can see that XRP has not followed the narrative of other cryptocurrencies. It has not rallied powerfully off the bottom. It is stuck in this range, what looks to be potentially accumulation, and it has really marched to the beat of its own drum. All right. It has really marched to the beat of its own drum. Of course, if we look at the linear chart, this looks very, very tasty. I believe this is the correct way to look at it because I don't think that we are ever going to be going back down to these prices unless for some reason it turns out that XRP is scraping users' data, in which case they'll actually probably fly because tech companies that scrape data actually tend to pump and do well. Anyway, so we plotted out the, excuse me. We want to, I think, yeah, here we go. So we already plotted out the risk to reward ratio of this particular asset, and I do believe it is an 8-to-1. Yeah, again, hey, it did it again, Alex. Or it's like, yeah, dude, you should put your stop loss all the way down here in negative territory, right? Basically, if you buy XRP, you set no stop loss. Okay, so if we just look at the risk to reward ratio on investing in XRP at current prices, if we go back to all-time high versus if we go back down to all-time low, we are still looking at a almost, yeah, an 8-to-1 risk to reward ratio, which is a very tasty EV. Okay. It's saying it's a sure thing. Yeah, it's saying it's a sure thing. So that's the perspective we have on XRP. So I did make an allocation to XRP this morning, and it is now in my long-term portfolio. I will be posting all those updates a little bit later on. All right. Got about 9 minutes left in the show, ladies and gentlemen. All right. So I will be happy to take any chart requests now or begin looking at any other thing that you guys find interesting. Meanwhile, I am going to take a Gandy here at Crypto Bubbles, and I'm going to try to identify any asset that really sticks out to me. Let's see. Tomo and Tao are doing okay on the currently this week. Let's see, Erlina, Ali, SFM. These are all things to watch and look for. Yeah, Ben is now in the top 400. The story around this token is absolutely insane. Is this Elastos? Yeah, this is Elastos. Let's take a look at Elastos. What is Elastos doing here? From Van City. We want to take a look at Hex? Of course, man. We'll take a look at Hex. Looking at Elastos, this is kind of crazy. Yeah, this is a weird one. Yeah, so we'll take a look at Hex. I see a question about orbs. Yeah, so orbitals or ordinals, excuse me. Oh, wait, you're saying orbs, not ords. My bad. I don't know anything about orbs. Unless we're in a graveyard and I'm taking pictures with my camera. I don't think we want to know about those orbs. All right, Hex. Let's look at Hex USDC on Uniswap, which I think is the most liquid market for Hex. Let's go double check. No problem, brother. Thanks for watching the show. All right, Hex. I want to make sure. Yeah, Uniswap has 15% of the volume. Uniswap V3, yeah. So this is the correct chart to be looking at. Here's the thing, man. Hex is an interesting token. Do I think Hex is a scam? No. Here's the thing. I did not get involved with Hex. There were a lot of members of my community who did. And I had all the objections to Hex that I think your average intelligent investor would, right? You just basically take one look at Richard Hart and you're like, no, I'm good, man. I don't trust this dude. But after seeing what Hex has been able to accomplish, what they were able to pump to, and, basically the continued strength of their community, and, again, like there's all these other cool things, right? About Hex, right? That are just smart from a marketing and distribution perspective, right? Like the fact that he gave it away for, you got it for free if you held Bitcoin, that you were able to use. And he's done this like multiple times, right? Where individuals were able to commit Ethereum to amplify the amount they got. And Hex did really, really well. All right. But that, again, at the end of the day, right? Like if what you touch does well, sustained, then okay. Now we are currently obviously seeing pretty negative price action on Hex. Is this unlike any other cryptocurrency chart we've seen? No, not so much. Smart. Yeah. So that seems to be the general consensus, right? Is that, and either way, it is indisputable that the guy was able to walk away with a ton of Ethereum. But again, those who got involved with Hex early did well. And this is, of course, the case for most cryptocurrency projects. Now, what kind of long-term success will Hex have? I don't know. Pulse Chain is obviously the new project. And of course, full disclosure, I am invested into the Pulse Chain project. I invested $7,000 last year, sacrificed for Pulse Chain. I've received my Pulse and PulseX distribution. I actually only received the PulseX distribution because that's all I sacrificed for. And I swapped some of that into Pulse. And then I also am providing liquidity to the PulseX farm to earn INC. So all of those things. So I'm involved with the project. I'm in their Discords, all those things, right? Or actually, hold on, let me just take a step back. I'm not involved with the project. I'm not working for or involved or associated whatsoever. But Pulse is out. Pulse is working. Pulse is the number 2 blockchain actually right now based on transaction volume. And I think that's because a lot of people got free tokens. Of course, everybody who held something on Ethereum was able to just come over and swap and get some free money. But yeah, Hex is down like 70%. And initially I thought that it was because the reason I thought Hex had such a sell-off was because I thought that when Pulse Chain went live, of course, there was the Pulse to Ethereum bridge, and it was just getting congested. And so it wasn't clearing, it wasn't validating all transactions clearing through the bridge. That's since now cleared up. And we've seen just an increase in network activity on Pulse Chain. Of course, it's on DeFi Llama, so you guys can go track all those metrics for yourself if you want. Then I was thinking, I think that's maybe what began it, was the fact that there was a little bit of FUD or fear over the fact that the Pulse Chain bridge was congested, even though maybe that's not such a plausible idea. But then the other thing that occurred with Hex is that this is a dynamic that I don't fully understand, but I do know something about it, which is where there was just special incentives for those who had Hex as well. So if you held Hex, you got a better distribution, or you got more access to things, basically, when Pulse Chain launched. And so you had Hex and PX, and there was even their own little special farm for that, providing liquidity that's now since closed down, that was only active for a few days. So I don't think that the supply of Hex doubled, but obviously there was this way to do things with Hex. Or maybe it's just as simple as individuals were holding on to their Hex to get these nice lucrative things on Pulse Chain, because that's where everything's moving to now. And this is just what we're seeing, everybody just kind of exit out of this current pump and getting prepared for the next current pump. I mean, that is a logical way to consider the idea, right? But I do want Pulse Chain to do well. I do want I don't hold any Hex, so I don't care about Hex, but now, I am the wrong person to ask if this is a good chart to buy. This is not the way I trade. I am not a degen. I don't like to buy cheap things. I like to buy things that I see. I don't like to buy like this and be like, oh, like once it goes up, I'll be rich. I like to see something moving up and being like, wow, look, this thing is moving up. I'm going to be rich. That's how I like to trade. I like to identify momentum, and I like to identify a currently existing trend, and then I like to follow the leader. All right. That's how I make money. Follow the leader, not be contrarian. I'm not a contrarian investor. It's just, some people have success with it. I don't. And, I trade liquid enough markets that, anyways, moving right along. But again, we can just be very objective about this. Let's look at HEX from a very technical perspective. Let's apply our pathways to profits trading strategy. Bottom feeder is suggesting to buy this dip. It started buying here, and then it quadrupled down here, synctupled down here, septupled down. Currently, bottom feeder is suggesting a price target of 0.023, invalidation at 0.004. So that's a lot. All right, that's like 80% to the upside and 60% to the downside. So that's still a good EV. Let's see here. We do have some regular bullish divergence here from Minx. Okay, so that is a positive sign. Price is forming a lower low, while our oscillator is forming a higher low. It is faint, but it is there, and that's all you need. Momentum is starting to die down to the downside here, so we don't see that same surge of explosion. We are below the baseline, so this is be a very contrarian and negative trade. Of course, we're looking for these trades here. We're not looking for these trades. So this is not a coin that I would want to add to my portfolio at the current moment. I'm good riding HEX. It's the new shiny tender thing, and I'll let, like the old crowd do what the old crowd's going to do. But bottom feeder is suggesting a buy. We do have regular bullish divergence here, and again, that 80% up, 0.023 price target. So that's going to be pretty juicy for some investors who have some faith in HEX and want to sit on this asset. Again, we've been here before, right? This is just, again, we're just retesting the previous lows that we established back early in January. Had a nice little pump leading up to the launch of HEX. Basically a sell-off back down to support, and we'll see where price action is going to carry us from here. That's really all I have to say about HEX. On the daily time frame, looking extremely overextended to the downside. We are sweeping below previous lows. Regular bullish divergence on the daily, and bottom feeder is firing. So those are the pros. On the 4-hour time frame, again, very negative. Not suggesting any buys here on the 4-hour either. And on the hourly, again, same thing. So hourly, we'd need to see price above 0.02 before we begin looking to take swing trades on this. But this has been down only for quite a while here. So we'll see if the HEX can turn it around here on HEX. All right, let's see here. Indeed. All right, getting back to this scene right here. I guess that's all. That's basically all we have for today's Memorial Day show. I just wanted to give you guys that market update. Let you know what was all the latest scuttlebutt in the cryptocurrency markets. We'll see if we have a peaceful week or an uneventful week. I think that we are going to get some resolution of our current range. It does look like we will be tracking a little bit higher in that range over the course of the next few days. And we'll see where price action is able to take us. Okay, that's about... Thank you very much, Vancity. You're a stud, my friend. Okay. Let's start heading for the door here, guys. Give me one sec. I got to see what I got to plug. Okay. Of course, obviously, for all the premium members out there, members of the private group, we do, of course, have our community coaching session coming up on Wednesday at 2 p.m. Mountain Standard Time. So make sure to check your calendars. You'll have the invites for that with the Google address that you used to sign up for the service. You guys should have all those invitations. This week, we're going to be discussing, again, a little bit more in-depth detail. We're going to be diving deeper into the on-chain fundamentals, and we're going to be looking at momentum strategies and how we can use momentum to our favor when developing our trading strategies. Let's see here. Okay, that's about all we got. I want to thank everybody for joining me for today's Breaking Bitcoin Market Update. We've laughed, we've cried. Hopefully, we've made money. You guys have been an amazing audience. If you want to stay connected after the show, make sure to join us in our Discord, discord.krakencryptocurrency.com, link down in the description below. And make sure to head over, supercharge your trading today, pick up a copy of our brand new free guide, The 5 Mistakes Holding You Back from Profitable Trading. This has been compiled over years of mentoring thousands of students around the world on how to build cryptocurrency trading strategies. I've condensed all of this wisdom, all this knowledge into 5 simple steps, the 5 most common mistakes I see traders make, and actionable information on how to fix them. 5mistakes.krakencryptocurrency.com. Link down in the description below. Download your free copy today. Other than that, if you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, please leave them in the comment section down below. We do randomly select one commenter per month to get a free month of access to our private group. And I think that's about it. Smash the like button like a Doji Money and subscribe if you haven't. And we will be back tomorrow. Same crypto time, same crypto network. Risk management and emotional discipline, guys, are the most important cornerstones of any trading strategy. Make sure to enjoy your life, trade safely, and I'll see you all tomorrow. Cheers.